In this presentation, we're going to record the receive payment and make deposit forms. In other words, in prior presentations, we recorded the invoice billing the client. Now we're going to receive the payment for it, take those payments to the bank, and record the related deposit. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. Before we move forward, let's take a look at our flow chart. This is in the QuickBooks desktop version, and we just want to see the scenario, the story that we had as we go through. It starts off when someone came into the store, they're looking for a guitar. We didn't have the one they want in the right color, so we ordered a custom one for them with a purchase order. We took that purchase order and then received the guitar from the client specifically for a particular customer. We then populated the expense form that we paid for the guitar, recording the guitar on the books, increasing inventory, decreasing the cash at that point in time. Then we populated the invoice. We turned around and took that guitar that we purchased specifically for a specific customer, and we made the invoice, helping it to be populated from the expense report that we made. And now we have the invoice, and now we're down to our standard kind of process down here. Now we're at our invoice. We're then going to receive a payment. We expect to receive the payment in the mail. And you can imagine over here at this invoice spot that we took the guitar, put the bill on it, shipped it out. Then we expect to be receiving payment. That's where we are now. We're going to be receiving those payments. We're going to collect those payments. Then we're going to go to the bank with them and put them into the bank. When we receive the payments, we're going to be increasing the undeposited funds rather than the checking account, decreasing accounts receivable. Then we're going to go to the bank and put it into the bank, increasing the checking account, decreasing the undeposited funds. All right, back to the QuickBooks Online. We're going to go to our receive payment. So I'm going to select the plus button up top. We're then going to go to the money in, and we want to have receive invoice payment. Again, note that QuickBooks will change this name from time to time. This is what they currently have, because I think they're thinking this is the most descriptive name, that they have in the process here. So you got an invoice, and then you receive the invoice payment. But when you go into the receive invoice payment, they're pretty much stuck with still calling this a receive payment form, because it's been that for like ever. So it would be very difficult to change that. So it's going to be called basically a receive payment form typically. Now this is going to be Anderson. We got a payment in the mail from Anderson from that guitar we sent them. So it's going to be Anderson, which we could just pick that one or type in Anderson and then type that and then tab, and that'll populate the invoice down below. So we have the invoice then populating down below that we shipped out. We're going to say that the date is the 28th. So I'm going to select it. I'm going to select the plus button just to bring it up a couple days to the 28th. The payment method I'm going to say is a check. So we're going to say it's a check that we got in the mail. And I'm going to get, we might want the check number if we have it. Undeposited funds, we're going to increase undeposited funds rather than going directly to the checking account, because we're going to take those and then go to the bank. I want to emphasize that process because it can be confusing for people. However, if you're in a situation where you're basically just going to take that check and scan it into the bank one by one, and the bank's going to have each deposit grouped one at a time, then you could just deposit it directly in the bank right when you receive the check. If, however, you're going to take all the checks and cash and whatnot that you have received, go to the bank, group them together, put them into the bank in some type of grouped fashion, then you want to go through the undeposited funds to link up the grouping to the how you're going to see it on the bank statement so you can reconcile. Then I'm going to check off the item down below. That's going to be linking the invoice, which will actually populate the amount received up top. If we got anything other than the full amount that should be received, in this case the $448.98, then we can put that amount in and calculate. It'll calculate the difference for what has not yet been received. All right, now we're going to record this and think about what's going to happen. What's going to happen? Well, it's a sale. It's a receive payment. Therefore, accounts receivable is going to go down. Whenever you see a receive payment form, you're thinking, okay, someone owed us money. They now paid us. AR is going to go down. The other side is going to affect cash in some way. You can either put it to the checking account, or as we are, which is the default or typically what QuickBooks recommends, first going through undeposited funds. And that's going to be the undeposited funds account here. So that's what we'll do. We're going to say save and close. And then let's check that out. We've seen this before, so I'm going to use the trial balance, which will be a little bit faster rather than using the balance sheet and the profit and loss. So I'm going to go to the reports down below. We're going to open up the trusty trial balance. So I'm going to go to the trial balance. And the trial balance, I'm going to spell it right one of these times. I just keep on trying until I spell it right by just sheer coincidence. And then I go up top and I'm going to say 010120 to 123120. And then we run that report. Then I'm going to duplicate the tab up top. I'm going to right click on the tab up top and duplicate it. And so there we have it. Let's close the hamburger. I'm going to make this a little bit larger to 125 so we can see what we have. And then scroll down. We know that undeposited funds should be increasing. There's the undeposited funds. If I go into the undeposited funds, we have this amount on the payment on the 28th. Going to the right, there's the payment. Now remember, it's called a payment here. You want to basically get to know the forms. This one's a little confusing because we called it 3 different names again. It's called a payment here. If you go into that form, then of course it's going to be called the receive payment. So just be aware of those different formats. It's really useful to go into these detailed reports and see and recognize these forms and know what those forms do. I'm going to go back up top, and then we're going to be taking a look at the accounts receivable. Accounts receivable here. There's the accounts receivable, and it should be going down. So there it is, going down, and there's the decrease to accounts receivable. Also note that, of course, this doesn't give us the detail on particular customers who owes us the money. For that, we would go into the accounts receivable or customer detail reports or customer summary reports, both, detail or summary. And that would give us the information on who owes us the money. I won't do this time because we have seen that in the past. All right, so that was fun. So let's do it again. We're going to go back to the first tab. We're going to go to add another one. We want to be down here in the receive invoice payment. Again, note the difference in name. This one's just receive invoice payment. All right, receive invoice payment. And this is going to be for Eric Music. So we're going to say Eric Music, which we could select from the drop-down or simply start to type in Eric Music. And there we have it. So we'll tab through this. And we're going to say it's on the 28th as well. So we're going to keep that. I'm going to say the type of payment was also a check. So we're going to say the check is the type of payment. We could put then in a reference number. I'm going to make this a little bit smaller because sometimes these forms get distorted when you zoom in on them. So I'm going to bring it back down to 100 here. Then I'm going to check on the invoice that we want down below. I'm just going to check on it. As we do, this will populate up top. So I'm just going to check down here, and that'll populate the amount for the invoice. And if the full invoice was paid, then it'll populate up here as well. So we're going to say the full invoice is paid. What's going to happen when we record this sales receipt? We know that the sales receipt is going to be decreasing the accounts receivable. That's the first thing we want to think of when we see the sales receipt. The other side going to some kind of cash, either the checking account or, as we have it here, undeposited funds. Let's record it and check it out. So I'm going to say save and close. Then we're going to go to our trusty trial balance. So we are now in the second tab in the trusty trial balance. I'm going to make this a little bit larger so we can see it. We're in accounts receivable. I'm going to open up the accounts receivable, scroll on down through it, and we should then see Eric Music. There is Eric Music. There's the payment, the type that we have, and that's for the decrease of the $547.50. Scrolling back up, back to our detail, back to our trial balance. The other side then being in the undeposited funds, which is an asset account. So it's going to be up in the assets. It's basically cash, but not in the cash section. We're going to scroll back down and say we have the payment here for Eric Music. There it is, Eric Music payment. And that's going to be going into the undeposited funds. So undeposited funds increasing by that amount for the $547. Okay, let's go back to our trial balance on this report. Next thing we're going to do is make the deposit. So that's going to be removing these items from undeposited funds, moving them into the checking account. So we're imagining at this time we're going to the bank. We're taking those checks to the bank. We're going to put them in the bank. We're going to group them together as one basically amount that's going to be affected or on the bank statement. So let's go back to the first tab in order to do this. So we'll go back to the first tab. I'm going to scroll down a little bit back to 100% so I don't mess up the deposit screen or QuickBooks doesn't, kind of squish up the deposit screen in a funny way or something. Then we're going to go up to the other side and we want to record a deposit. So we're going to go into the record a deposit. It's going to be going into the checking account. That should be the default for most of the time. We're going to have the date. I'm going to keep the date at 1/28/20. And then these two items that we had put into the receive payment are now populating here. And I'm going to select those two items. So I'm going to select this one, select that one. that'll populate the deposit form. Now, if we were doing some other type of deposit, we wouldn't be using this top section, but the bottom section here, where we can just put a deposit directly in without going through the receive payment and invoice process or the sales receipt, and simply hit an account if, for example, we, the owner, put a deposit in or something like that. In those cases, recall that I would typically use the register, go directly to the register, which will still create a deposit form, but I think it's a little bit easier if that's the process you're going to be doing to use the register. When you go through the sales receipt and so on and go through undeposited funds, then it's useful. That's when I would typically be using or going directly into the deposit screen for the data input. We have the 99645 here. What's this going to be doing? Of course, it'll be increasing the checking account. It is a deposit. The other side will be decreasing that undeposited funds, basically the holding account, the cash kind of holding account, until we put it into the checking account. It will group it into the checking account at the full amount of the 996.45 because that's what we expect to see on the bank statement from the bank and therefore be able to reconcile for it. On the undeposited funds account, however, it will list the two accounts separately so that we can see the increases and decreases, increases from things like the sales receipts and the received payments, decreases from the deposit form. Let's go ahead and say save and close and take a look at that. We're going to say save and close and then go back to the trial balance. Now in the trial balance, I'm going to make this a little bit larger, scrolling back up again, back to the 125 or so, 125. Then I'm going to go into the checking account where we should see that deposit. Scrolling down to the deposit on 128, there it is. Notice both amounts are combined. You see the full deposit at the 996.45. So it's combining them together. That's how we expect to see it on the bank statement, although that deposit consisted of two separate items. Closing that back out. Going back up to the top, let's take a look at the other side, which is going to be decreasing the undeposited funds account. So we're looking for the undeposited funds, which is also an asset account up top. So we're looking here, undeposited funds. It's at 0. However, QuickBooks still puts it on there, which is nice because that allows us to do the auto zoom thing to see the detail for it. We go on that item, we'll see down below that we have the deposit here and a deposit here on the 28th. And so it's broken out into two separate deposits, even though it's on the same deposit sheet. Why? Because that allows us to do this tick and tie thing. That allows us to tick and tie the increases and the decreases so that we can basically tie them out. So if we went to either one of those deposits, then if we go to one of these deposits, which was, let's see, this bottom one was on the 28th. It was that, like this one. That one's at 547.50. The full deposit was 996.45. So we'd have to then go to the deposit screen to see what the actual deposit was that was going to appear on the checking account side or on the bank statement side, and then in the undeposited funds, it's going to be breaking those deposits into the related categories so we can match them out. So I'll go back up to the trial balance so you can just kind of take a look at where we are so far. So we'll go back to the trial balance and you can match out these numbers. Also note, I am, of course, printing the trial balance as well. So you should have a PDF copy of it so you can kind of check your numbers at the end of each session for the trial balance and see if you're in balance. Or in other words, you will be in balance, but see if it'll tie into us. QuickBooks will force you to be in balance, but let's see if you tie into what we got here.